So guys, we definitely appreciate you guys, everybody taking the time out. Everybody's got a lot going on. It's the new norm, right? So, we definitely appreciate you guys taking the time out. So not only we could get some insight from you guys, but everyone listening and watching could get some insight on really what's the pulse of the market right now. Everybody has a million questions that we speak with on a daily basis, and we're primarily dealing with buyers and sellers. So it's good to hear, the perspective from mortgage professionals, especially people of your ilk who do a ton of business in this region, New York in particular, and Serge, who, started out, doing rehab closings and stuff of that nature, to now he's one of the top attorneys for new development all across New York. So it gives a good scope of, some insight, especially with the pandemic going on. So I guess, we could start with the lenders and, maybe get a pulse of what you guys are feeling, in terms of, I guess I'll start with Danny. So Danny, being that you were on first, right? So Danny, we've all, it's like I said, it's a new norm, right? So we're all going through a lot, just to keep it simple, what have you learned for the most part from the shutdown?
I've learned that we're freaking resilient. And if there's a way to get a deal done, even in times of shutdown, we're all getting it done. We're being as creative as ever to try and make something work. And I'm really optimistic about what I've seen over the last couple of months. Has it been as easy to close a deal today as it was last May? No, of course not. It definitely wasn't. But deals are still getting done. Lenders still have an appetite. We really, really do have an appetite for new loans, especially purchases. We're actively seeking buyers that are well qualified, and we're really incentivizing new buyers. So I've learned my number one takeaway is that if there's a way to get something done, we're getting it done.
Nice. So when you say incentivizing new buyers, like what are you exactly doing to incentivize the buyers with the climate that we're in?
So right now, purchase rates for mortgage rates are at all-time lows. And when you can bring the cost down for a buyer to where it never was before, that is the number one incentive a buyer can have if they've been sitting on the sidelines, or if they're in position to buy something now. It doesn't get more fiscally and financially able than it does right now when they can borrow money at the cheapest level that it's ever been. So when I say incentivize, I mean literally from an out-of-pocket standpoint, it doesn't get cheaper than right now to buy.
Yeah, that's very interesting. In terms of how things have changed pre-pandemic till now, what have you seen like the biggest change for the most part?
The biggest change has been actually not for purchases. So that's another optimism that I have. The biggest change has been banks really not wanting to, or not wanting, but holding back more on their or refinances versus their purchases. That's been the biggest change that I've seen from a mortgage lending standpoint, that refinances are taking a back seat, but banks are still actively seeking purchases. And where purchases may have started to look a little bit differently, and this is varying bank by bank, which is, it's good that we have Kristen and I to bounce off different points of view from different banks, is that certain criteria for banks have changed as far as down payments go. You might find a couple of banks that only want, let's say, 20% or more down payments. And the reason you might see that is because the landscape of future values is a little bit unknown for banks right now. So they want to make sure that some equity being put in might be a little bit more than it was previously. Now, Citizens, I work for Citizens Bank, we're still allowing lower down payments. However, something that we are requiring, which is another major change, is that we are actively requiring appraisals done on all of our jumbo purchases and mortgages, which means that we have somebody go out into a home actively right now. And, you know, we're stay at home. So that has its pros and cons, where I'm actually going to pass it on to Kristen, where there are other banks that will actually allow you to not have somebody walk in and do an appraisal. So Kristen, you want to speak about that?
Yeah, absolutely. So I feel like what, and I don't know who's on the call listening, but what you're going to be finding is some banks are requiring only interior appraisals, and some banks are still allowing exterior appraisals, which certainly is going to impact loan to value depending on the bank that you're seeking out. And it's really varying in the landscape. So it's important to have lenders like Danny and myself. We actually talk to each other and we say, what's going on? What are you doing? What can't you do? What can you do? Because really the solution is to find the right loan and the right place for your clients or for you if you're buying. And sometimes it might be with me and sometimes it might be with Danny. The good thing with having the not doing interior appraisals is that we're not putting people in close contact due to the shelter in place ordinance. The negative side of that might be that if you are looking to max out on that loan to value, then you really need to get an interior appraisal done, because that's really the only certainty that the bank is going to have in order to offer the maximum financing. And right now, a majority of the country has been notated as a not stable kind of declining market, which is not something that maybe you're seeing outside of the city. You know, there are some people that have fled outside of the city to purchase, and we could probably talk about that a little, Danny, too, is there are some people that are leaving because of the shelter in place and finding places in Westchester, but there are still a lot of people that are coming in and looking for those deals in the city now that things are coming to kind of normalizing. That's the right word. So ultimately, it's really just finding the pros and the cons between the two. Rates are low at all of the banks right now, especially for purchases. And to recap what Danny said earlier, I don't think they're seeing as many limitations on the purchases as you really are on refinances, which is understandable because it's difficult to really know where the property values are going to be coming in this spring market that has been moved to maybe the summer.
Interesting. So if there's, Kristen, if there's one thing that you would point out that, you know, buyers and sellers should know in this, you know, in this particular time, like what's the biggest thing that you think that buyers and sellers should know right now?
I feel like things are taking a little bit longer to get done. So from a turn time standpoint, I think having a human understanding that maybe the title work is not going to be done as quickly that the attorney requests, or the insurance policy isn't going to be set up as quickly as wanted, or maybe the appraisal, instead of taking 5 days, takes a little bit longer. So having that understanding that we are trying to move things as quickly as possible, but in home purchase scenarios where someone is asking for financing, I would certainly recommend that the buyers get a pre-approval, a credit approval even, so fully vetted before even going into contract, because that can certainly help to expedite the process if they're looking to move quickly.
Interesting. So basically, you know, get a credit approval prior to starting the search. So that way you're fully vetted, and once you find something, it's a more efficient way of going about purchasing, basically.
Some banks call it pre-commitment, some banks call it pre-approval, some banks call it credit approval. It's where you would actually, if you're getting a loan, provide the documents for your income and assets before you find the property so that you're fully vetted. And and then certainly that will help from after you're in contract or an attorney review, to really all that's needed are the appraisal, the title work, the insurance. And so that is what I'm trying to do with the clients coming to me.
Awesome. That's great information. That's great insight for sure. One other question that we get a lot, and I wanted to ask, you guys, especially, being that you guys do so much business in New York, have you seen, or what have you heard in terms of interest rates, right? Because prior to the pandemic, we've heard, hey, after the election, we expect rates to go up a little bit. So there's certain people who are considered more high risk than others and still have that worried idea that, hey, there's going to be another wave. I can't really go out. I don't want to venture out even after things open up. Maybe after, the second wave, we'll, quote unquote, second wave, that we'll be able to buy at that point. So do you expect interest rates to go up at the end of the year? What are you hearing from in terms of some insight on that side?
Danny, do you want to start?
Sure. Personal opinion, I expect rates to stay stabilized. However, we really can't speak on where rates are going because that's just such a hard predictor. The Fed has lowered their rate to 0, which I got so many texts and calls that day. Oh, the rate must be 0% now. Are you going to let me borrow money for free? Of course not. No. That just means that the rate that they are charging lenders to borrow money is 0. So in turn, that would translate into banks lending at a cheaper rate, but not at a 0 rate. So that federal fund rate is not expected to go up in the near future. But in these times, we don't know what the near future even is. Is it a month? Is it 6 months? And it's so unpredictable. So personal opinion is that it sort of stays where it is, plus or minus 0.25%. But it's just so difficult with so many moving parts. Kristen, what do you think?
Yeah, you took the words out of my mouth. I mean, you didn't, but the Fed funds rate is 0. And I agree that personally, I do think the rates are going to stay low, but it's something that we cannot predict. I think that Danny and I are lucky in that we have banks that offer relationship pricing discounting as well. So those are opportunities where those additional discounts can help buyers keep their interest rate low. But we're seeing rates in the 1s, the 2s, the 3s, the 4s. It really depends on the circumstance. Right. And I do certainly think that it's a great time to buy with the rates being where they are.
Interesting. And just to expand off of that, I know banks have changed some of the programs in the last few months. Do you guys have anything now where, say the interest rate hypothetically is 2.75 and the buyer's like, hey, I'll take a higher rate, maybe in the low 3s or the mid 3s, if the bank can upfront some of the closing costs or something of that nature. Does any of your banks provide any programs like that for buyers who might see this as an opportunity to really jump out and get out of their quote unquote small apartment and get a backyard or a rooftop or something like that?
Sure, you can offer, the banks can offer credits towards closing costs. And if the client decides they want to take a higher rate, then the bank would have options for offering credits towards whatever the fees are, the New York mortgage tax that we all have to experience, maybe the mansion tax if it's above 1%. I've had some clients take advantage and decides to take slightly higher interest rates to get larger credits towards closing. Danny?
Yep, I've seen the same. Just the one thing to note about that is that the maximum credit a bank will give is what the closing costs actually are. And where that plays a factor is co-ops, because there's all different types of real estate. Co-ops, condos, new development condos, houses. Co-ops in particular have the cheapest closing costs, which is great because that means the lowest out of pocket, but that also means the lowest opportunity for a credit from the lender. So that's just one thing to know. You can definitely offer a higher than market rate for some credit at closing, but on the co-op on a co-op deal, you might see a little bit less of that.
Awesome.
Right. If you're working with the real property, so not the co-ops or businesses, absolutely. All of the real property with the larger closing cost, that's something to kind of offer to clients or let them know that there could be that option if they're falling short of the down payment and the closing cost combination.
Fantastic. So I'll bounce this off to Serge now. Serge, you do Serge is, just to give you guys some insight, everybody watching, Serge is one of the hardest working attorneys in New York City. I like to feel like I'm on a hotline when I get a hold of him because he doesn't pick up the phone for everybody at any time, but he tends to get back to me and Justin fairly quickly if he doesn't pick up. So I greatly appreciate that, Serge, because you're so busy. Just to give us some insight on your side of the real estate business, what have you learned from the shutdown, that might be helpful for everybody watching and listening?
So what I learned personally, that we don't need 7 people yelling in the same room in order to close a deal. Which is kind of nice because everything is the way it's supposed to be. We discuss everything and set everything before the closing. And on the closing day, people just sign the docs, transfer the funds, and move on with their lives. No one's sitting there and yelling over a doorknob or a spot on the wall. So that's kind of nice. But in reality, it's taking a lot longer to close the deals now. Just because logistically, a lot of law firms and title companies are not set up for this, especially older attorneys. It's taking them a little longer to kind of get the technology and everything else in order to move forward, but we actually welcome it. I'm hoping that that would be kind of a new norm, that we're able to close deals virtually going forward. Something I wanted to ask Kristen and Danny, I've started seeing in the past 2 weeks in pretty much all of our contracts, we had mortgage contingency set at 30 days. And now everyone's requesting 45 days for the commitment to come in. Is that something that there's a delay on the banking end, or people are just being cautious to make sure that they meet the deadlines?
I'm seeing a mixed bag. I'm seeing in the city, I'm seeing some that are 30 to 45 days, and outside in other boroughs and outside of the city, I'm seeing some people waiving their contingencies still. So I think it's circumstantial, but I definitely think that having that additional, that 15-day window allows for you, Serge, not to have to go back to negotiate an extension on a commitment. So it just makes it a little bit easier from a timing and expectation standpoint.
Yeah. Well, what I do on my end, we say, okay, 45 days, but they still have to go and apply within the next 5 days. As soon as the contract's signed, they need to apply within 5 business days. Because you have a lot of people shopping around and waiting for 40 days. And then come day 45, they need another week or 2. And now we're dragging to 2 months. So we're saying, okay, but we still need that contingency that everyone starts applying right away.
Mm. So Serge,
so I'm seeing those. Sorry.
So go ahead, Danny.
So I'm actually seeing those extra 2 weeks come in handy, especially because we're still doing appraisals, and appraisals are taking longer now because there's only about 30 to 40% of the appraisers actually working right now. So when we're still pushing in orders, there's only so many people out there to grab them. And if they are grabbing them to go do their order, then there's some hesitancy from owners to let them into the house, or they just need to get away for the weekend and then let them in. So those are taking longer to get through. So I'm seeing the need for the extra time for a contingency so that we can get the appraisal done beforehand.
Right. Well, the way we address it in our contracts is a new COVID clause that we have with regards to COVID or any other pandemic. Anytime any of the parties, either the lender, title, or attorneys, require extra time because, let's say, the county is closed, or just like you said, we can't get the appraisal in on time for whatever reason, both sides will mutually extend those dates. So what I'm trying to do is kind of cut down on those dates to begin with, like mortgage contingency, 30 days. And then if they need another week or two to get the appraisal done, that's fine. I just don't want to wait 45 days to be back having that conversation again, you know?
Interesting. So Serge, the COVID clause, is that primarily for that extra window of time, like a buffer just in case everything happens for people watching? Like what exactly is the COVID clause encompass?
So the COVID clause pretty much states that any of the vendors that are part of the transaction, we're talking about attorneys, real estate brokers, title companies, municipalities, because the searches need to be done. For example, Nassau County, they're working just a couple of hours a day, for example. So in order for us to get the title report back, where before it took a week, now it takes 2-3 weeks for it to come back. So because of those delays that have nothing to do with the buyer or seller, right? They're all by third-party vendors. Due to the COVID clause, we're able to extend those deadlines without penalties.
Interesting. Interesting. And Serge, the same question for you in terms of, we might have covered it already with some of the details that we went over, but if there's one thing, like if a new client approaches you with a deal, what's one thing that, you know, whether it's a buyer or a seller that, you know, that you weren't informing them before that you're going through now? You know, what's one thing that buyers and sellers should know if they're trying to transact a deal in this time?
Right. Well, what we're telling them right now is just make sure you're okay with the dates. We ask them for their timelines right away. Do you need to move? Once you sell, do you need to buy right away? What's your exit strategy? What's your end goal? To make sure we'll let them know that this is how long it will take approximately, more or less, in order for you to meet those deadlines. Where before you had about 60 days from contract signing to closing, right, with the mortgage. Now, it could be a little shorter, it could be the same, but it could be longer just because of those third parties that are involved in the transaction. So having that time frame really, really helps.
Interesting. Have you seen, Serge, have you gotten a lot of deals that have gone in contract over the pandemic, or how's business been for you in the last couple
I feel like last week was the first week that we started getting new deals in terms of our buying and selling.
Interesting.
Before that, it's been pretty slow. I mean, thankfully, we represent a lot of lenders, so we've been good with bank closings. It's been super busy. Lots of CMAs, refis, and everything else. But now on the buying end, you know, we're really moving up.
That's awesome, Justin.
It's getting busy.
On your side, Justin, from the real estate side, I guess, you know, the same question to you. You know, what have you learned throughout the shutdown?
I feel like the shutdown, I feel like we're in phases. I feel like phase one was basically up until April 1st, where there was like no new business for us. It was literally like, all right, what deals do we have in the pipeline that are in contract? Let's get it to a closing table. And if there are challenges to getting, you know, that home, you know, to the closing table, like what were the challenges and how can we adapt, right? So like, for example, we sold a home in Jackson Heights. There was a Department of Building violation that couldn't get removed because the Department of Buildings were shut down for the first few weeks. So that was like phase one, like adapting to, all right, like there is a new business, but like the business that we already have, like how to get it to the finish line. I feel like phase two was last month, where it's like, okay, how can we adapt to the new normal, right? How can we leverage technology to help buyers and sellers? Because at the end of the day, we're focused on residential. People still have to move. People still have to sell. People still have to buy. And we also, manage buildings for our landlords. And, people still have to rent an apartment. So it's like, okay, how can we leverage technology? That way we could do virtual showings, virtual walkthroughs, and, do everything virtually, basically. That way everyone is safe. Then I feel like, I like going back to Serge's point, which is like, I would say, the past couple of weeks, beginning of May, was like, kind of like phase three, right? People already have adapted to the new normal. The stock market has started to stabilize, so there isn't a shock there. So, and, if you have a job, yes, it's more than likely, hopefully you could keep it, right, for the next, year or two. So it's like, okay, I still got to move. Like we're working with a buyer and she's like, I got to move. This is actually the perfect time because she's an actress. Her production is shut down. Thankfully, she's a successful actress, so she has income. So she's like, okay, this is the perfect time for me. I'm not doing anything, I'm not filming, so I have to buy. So over the past couple of weeks, we've been having a lot more conversations with buyers of, all right, I got to buy this. The interest rates are great. And yeah, so I think from here on out, I think you're going to see things starting to stabilize somewhat, not towards pre-pandemic, but I think you're going to see some stabilization. And I also agree with Serge. From doing some virtual closings, I feel like business in general in New York, real estate business in New York, I think is going to be a lot more efficient, which is a huge plus for us because we're going to be able to save a lot more time and be able to use that extra time to service our clients in a better way.
Yeah, the new norm. I mean, with that said, you gave us a lot of great information. All of you have really, but to speak on, Justin, what you had just mentioned in terms of a lot more things in the marketing and sales process being done virtually. What are some distinctive features or ways that you're marketing property virtually? If you could explain.
So what I like to ask sellers or what I like to ask buyers are you familiar with Google Street View? I'm pretty sure like 99.9% of people are familiar with Google Street View. So I mean, we basically use the same service to do a 3D walkthrough to show a home, and if they need to see it in person, I mean, we could do a Zoom showing. Department of State of New York, we can't technically show in person, even though some people have, but for the meantime, we exactly right there. But for the meantime, I mean, we could use a similar service that's almost identical to Google Street View.
Interesting.
For a property.
And I get, from speaking to sellers, I get a lot of questions in terms of, hey, Steve, how much has property values dropped in the last 2 months, right? Can I get, from buyers, can we offer 10, 20% off of the asking price and get a deal done? I hear, a lot of questions like, hey, not only is it great interest rates, but people are going to be desperate to sell, right? So what have you seen, firsthand from dealing with sellers and dealing with buyers who are trying to negotiate deals?
So the one great thing about being at Compass is that they send out a survey every week to all of the agents. They basically ask the agents, do you represent a buyer? Do you represent a seller? Have you received any offers? If so, how much off the asking was that offer? And if the offer was accepted, how much off the ask? How much of a discount were there? So if you're submitting an offer that's typically above 15%, you're not going to get a deal. That's what the current numbers. So from the latest data, what we've seen is properties since new deals, right? Not deals prior to March 16th, but new deals after March 16th, we're seeing like a 5 to 7% discount on average. And most of those properties that went into contract or have been negotiated are between the $1 million to $2 million mark.
Interesting.
So I actually have a question for the panel, for Serge, Kristen, and Danny. What for New York? I mean, because we're focused. I know you guys do some deals outside of New York, but New York focused. What have you seen, like for new deals? What price points have they been coming in?
So that's interesting because appraisals, I don't know, Danny, I'll start off. The appraisals haven't started to come in quite yet for the new purchases. And my comparison standpoint is really the refinance appraisals that have come in. And it's complicated to compare refinances to purchases because it's just a different market. And people that think their properties may have been valued much higher than where the refinance appraisals are coming in because they purchased in different markets. I think that it looks like the real estate industry is pricing the market right so far, and I've had 2 appraisals come in, again, not a ton, but 2 purchase money appraisals come in New York City that have been at purchase price. So it's not a great widespread figure, but that's some positive news. What about you, Danny?
I've seen from as low as a $300,000 co-op to a mid $2 million multifamily in Brooklyn. I've seen the appraisals so far all coming in at or above the contract price. And it's so great to see that, because that's a true testament to what you just said, Kristen, that pricing is right. And whether that pricing was an asking price from March, or whether that pricing was a 5% reduction in the middle of April, the consensus is that the prices are in line, the values have been staying in line, and that's extremely optimistic. And it's been a wide gap. It's from, like I said, those smaller co-ops up to the bigger condos or multifamilies. I've seen consistency there.
Interesting. Serge, have you seen any deals that you were working on where the buyers are not happy with the purchase price and trying to renegotiate after the fact? Have you seen any deals that have possibly fallen through or been delayed because of frustration on the buy side?
So I would say 80% of our deals right now, most of them we were able to renegotiate the price, even in the middle of the contract, while the contract is already signed. On both ends, buyer and the seller, we had sellers that we represent that were willing to take the price reduction just to close the transaction, and same thing on the buyer's end. One of the deals we went just as high as $130,000 reduction while the contract being signed. So
interesting.
People are making amends just to close deals, and right now even the sellers are more realistic, especially those that need to sell. They'll work with everyone. But then you have sellers, if it's an investment property, for example, we had few guys that just took it off the market, decided to rent it for a year or two before putting it back.
Interesting. And you deal with a lot of new dev, a lot of, condo developments.
Right.
Have you seen, what's the process for maybe developers who are looking at this, webinar? What's the process like nowadays in terms of offering plans, sign-offs, and stuff of that nature?
So in terms of offering plans, we're still moving forward. We're actually filing 2 next week. And paperwork-wise, this is a good time for them to get together and kind of provide everything to their attorneys to make sure everything's filed on time. So at least the brokers can start selling on paper for now until the construction resumes and everything else. Then we have some of the developers that projects should be done shortly. A few of them are opting out to wait till the end of the year before launching those buildings, just to see where the market will be.
Interesting. Have you guys had, anybody could answer this, have you guys had any insight in terms of when things, none of us are psychic, right? We can only, go according to what we think and what we're hoping and what we're hearing. When do you think things should get back to a sense of normalcy? Is it after we get testing and stuff like that? Or is it, next year? I have people that I've spoken to that were on calls with, some of the top, Fortune 500 companies on phone calls. And they're like, Steve, it's not going to get back to normal until 2023. Everybody's saying 2023. So is it really 2023? Is it 2022? Are we going to be, at this time next year, are things going to be, somewhat getting back to normal? Again, nobody's psychic. We're not going to hold you according, to what you say, but just, some insight. What are your thoughts on?
I don't think there's an exact date, but even with the vaccine and everything, hopefully happening, there would still be a hesitation with a lot of people. What can I do to change? So I believe that the lifestyle and the way we do business going forward will change drastically. There's no time frame on it going back, because I believe it will never go back to normal. This will be the new normal, not the way we are right now, locked up at home, but there would be a new norm that everyone will adjust to. And we're seeing that with our business, where there was no new deals let's say a month ago, where now people are loosening up their understanding that this is a long-term issue, and we just need to make the best of it and adjust accordingly through the way we do business and the way we market and advertise and do everything else.
Interesting.
Yeah, I tend to agree. I tend to be optimistic, but I think saying 2023 is a little bit pessimistic, especially with all signs point to a vaccine coming within 10 to 14 months or something like that. But I agree. I think, life will definitely change. Hopefully, us as a society, we could, come together and think about each other more, just be more sanitary. That way we don't spread, other types of viruses. But I don't agree with that statement. I think end of quarter three, beginning of quarter four, I think we're going to see a lot more deal flow. I just think right now, even speaking with, buyers that just started looking, the sample size, being that inventory is down about 80%, I think the sample size is just, a lot lower. So I think we'll see a lot more inventory come to market quarter three, early quarter four.
Yeah, Danny and I were talking before the call just about the number of pre-approvals we've had come in the last 2 weeks. I mean, it really has jumped remarkably from what we saw in the month of April. So I think that's a testament to people itching to get going and finding places and looking for that new normalcy. I think it's exciting. I think to be optimistic, I tend to be like Justin. To be optimistic, I think the silver lining is that maybe these changes will make our real estate process easier, not as many things and to jump through, so many obstacles. Right. Other states have a much easier process than the state of New York, and so maybe we can learn from that. Like Serge was mentioning earlier, those closings are happening much more quickly and smooth. Well, not quickly, but more smoothly because right. There's less back and forth. And I think that with the rates, hopefully, and Danny and I tend to agree, staying low, it's still going to be an opportune time for people to take advantage of buying new places. So I tend to lean towards the optimistic side as well, and I agree that things are picking up, and I think Q3 and Q4 are going to be busier.
Nice.
Yeah, I don't necessarily have a date, but I'm probably the most optimistic from everyone that I've just heard. And I just kind of feel, as New Yorkers also, like we're so ready. And as, everyone has that sense of fear. Personally, I don't want to go on the subway right now, but eventually I'm going to have to go on the subway. And then once I go on the subway, and then a week later, if I'm not sick, I'm going to go safely to a restaurant and safely to a retail store. And slowly but surely, it will, I'm not going to use the word normal. No one knows what normal, we could throw that word out the window. But, we're not going to get rid of the New York City subway system. We're not going to get rid of New York City retail. We're not going to get rid of New York City restaurants and nightlife and arenas.
That's why we're here,
right? Right. So it's going to happen. When it'll happen, I don't know, but I am extremely optimistic that it will happen.
I 1,000% agree. Like I've been driving around Brooklyn. I actually went to Brighton Beach with a mask, but I went to Brighton Beach on Sunday, and people are out. People want to go out. People are tired of being home, and it's. I know
that whole area is immune to anything. So
exactly. There you go, Serge. So it's like people are not going to stay indoors forever.
Yeah. Absolutely. And guys, on the lender side, I know we've touched on it. Kristen touched on it a little bit as well. From prior to the pandemic, really, well, prior to this month when, with pre-approvals, have you guys seen a lot of pre-approvals turning into hard deals or like more now? What's the insight on that? And I know, for people who had pre-approvals for a few months now, have you seen them turn into deals over the last month or so?
The last 2 weeks, it's been, knock on wood, it's been wonderful. It's been exciting to see people making and striking deals. Absolutely. I've seen, I should know my ratios, but I've probably seen over a dozen applications turn into real contracts.
Awesome.
Yeah, it's really been amazing. So there was this end of March, early April, where people who had seen property earlier before the shutdown, they were negotiating the contracts and going in slowly. Then there was this mid to end April tumbleweed. You know, you could see them, you could hear them. There's nothing going on. And it was a little disconcerting. You know, that optimism that I had 60 seconds ago wasn't there. But the feedback that I've seen from everybody, and basically starting May 1st, just being on the phone constantly with eager buyers who are not just searching online, deciding, hey, you know, I'm going to eventually buy, but pulling the trigger on offers and signing contracts, wanting to get deals done. And like Kristen said, in the last 2 weeks, the spike, I mean, we're all watching the market, so they all talk about the V shape that we're supposed to see in the stock market. But if you look at our applications, I'm seeing a V shape from that end of March and then that pitfall down in early April, and now starting to come back up.
Nice. And have you guys seen a lot of, and Justin, you can speak on this too, have you guys seen a lot of sight unseen deals taking place over the past, month or two?
I think we actually just received 2 offers on the building that's sight unseen. So I mean, it's out there. I don't think it's gonna be the new normal. I definitely don't think that it's gonna be the new normal. But yeah, I don't. That's my opinion.
I've had some buyers that have been cautious, but have seen the properties. I think they're wanting to actually see what they look like. So, and there have been, I think some of the condos and co-ops and the single family homes are different, have been realistic with allowing now people to come in to see properties.
Yeah.
So I think the word a lot is used relative, because if I compare this to last year, then I'm definitely seeing a lot of sight unseen. But it's really maybe just for an investor, one-off here and there. But a first-time home buyer is looking more to touch and feel, get inside. I have one contract for a first-time home buyer that's sight unseen, but it's definitely not the norm, like investors might be.
Understood. Serge, have you seen a lot of deals get to the closing table where the buyers haven't walked through or haven't seen the property themselves?
Not yet.
Okay.
I don't think we're there yet, to be honest with you. I think the action is just happening. People are just now realizing that this is something they can do and this is the new norm for them. So I think going forward, we're going to start seeing a lot of that.
And Justin, with buyers, right? With buyers wanting to see properties, have you gotten creative and just sourced out off-market properties and areas that you're working just to kind of get video walkthroughs, or what are you doing with that? Obviously, like you mentioned, it's an 80% decrease in.
Yeah. I mean, we have a lot of our listings are with developers, whether it's townhouse or condo. So sure, I mean, if there's a buyer that's interested in a townhouse, of course, we're going to reach out to that network to see if they have anything that's not that's not on the market yet, that's in the pipeline of close to being finished.
Nice. And guys, in terms of, I had a developer that I spoke with yesterday, a townhouse developer, and he said, Steve, let's not do anything with the price. Let's not do anything drastic. People are going to want to move out of Manhattan. They're going to want to go into Brooklyn. They're going to want to go into Queens. They want to outdoor space. They're going to want backyards. What have you seen? Have you guys seen a lot more? I know Kristen touched on it earlier. Have you guys seen, a significant amount of people that are looking to move out of Manhattan into the outer boroughs, or even, like you said, Westchester or Long Island or Jersey? What have you guys seen?
So I could tell you my last 6 deals, because I was looking at this right before the call. The last 6 deals I brought in: 1 Manhattan, 2 Brooklyn, 1 Staten Island, 1 Jersey, and 1 in Queens. So that shows me that 1 Manhattan, and then the 2 Brooklyn were townhouses. They weren't even condos or co-ops, so it was a little further south of the park. And then you have the Jersey, Queens, Staten Island. So there is, I don't know about an out-of-city trend, but there's, at least, because I consider the boroughs the city anyway. So, but, Manhattan might, at least for right now, might just not be as aggressive as anyone else.
Interesting.
If I look at the last, we'll stick with 6 because that's an interesting number, Danny. If I look at the last 6 that I've done, I'd say there are 2 in Manhattan. I've had 2 in Brooklyn, one in New Jersey. I just got off a call with one on the Jersey Shore. That was for a second home. And then, so now I'm going to 7, and one in Westchester. So it's been I think it's a mixed bag right now. And I think it just depends on who we're talking to, right? You know, there are some, I feel like those people that were putting Manhattan on pause are now starting to like come out and say, oh, hey, what's going on? Maybe, you know, like you said earlier, maybe I can get a deal. Let me see what's going on. Or, okay, things are feeling more comfortable and settled. I'm gonna move forward with that purchase in Manhattan. And then there are some people that certainly are like, where's that 2-family home? I want that space. And Danny and I are seeing that a little bit too.
Interesting. Justin, how about
Brooklyn and Queens and so forth?
Have you seen Serge? Have you guys seen an uptick in deals going into contract outside of Manhattan?
I don't think for me Manhattan per se, but what we're seeing, something that we actually spoke to our developers at length about. A lot of potential buyers are looking more to downsize from high rises with a lot of amenities, which technically they cannot use right now, and in the future will be limited to paying less as common charges and going to smaller boutique buildings just to have a little more space. Home offices being one of those. Where before people didn't spend so much time at home, right? A lot of us actually lived in our offices or at the showings, right? We never spent so much time at home. So now with space and everything else, everyone kind of thinks twice of what would they need for the long term, you know, going forward. So yeah, smaller condo buildings, boutique condo buildings would definitely be a hit going forward, especially with home offices.
Yeah, I think I know we were on a call with our CEO Robert Refkin a couple of weeks ago, and he mentioned that and he was also on CNBC talking about this, but he said there's a spike in searches for houses, for townhouses in general, and he feels that the townhouse market is going to be a lot stronger, where it was reversed prior to the pandemic. And then, to answer your question directly, Steve. All of the buyers we're speaking to right now are looking for townhouses. So that people want more space, and they're coming from a condo, like they own a condo, like a 2-bedroom condo. But I will point out, we have this listing that's coming up at 175 East 62nd Street at Midtown. It's not on the market. It's coming soon. It's a 2-bedroom. And we've been getting a lot of inquiries for that listing. But that listing is also priced at 1.2, basically.
A little plug.
Yeah, and it's a plug. Yeah, of course.
Interesting.
I actually have a question for you guys.
Go right ahead.
For you guys that deal a lot with developers, have you seen thoughts on new projects that might have amenities instead of a gym, but maybe like a shared workspace, so that people can do the work from home, but not literally in their apartment, but maybe there's a designated sort of area where you can rent, or it's part of your price, where you have a certain amount of square feet for a little office, but not in your apartment. Has there been talks about that?
I personally haven't had discussions of where it was planned, but I did mention to one of our developers that they need to rethink the way amenities are going to be used going forward.
Yeah, I can speak on, we have a rental development that we're working on now, and the developer was asking me, hey, should I put a gym or should I put a residence lounge / business center in the building now? So I know it's top of mind for developers, but we haven't, it's new, so we haven't really gotten and Serge, have you developers change their plan to fit more or different amenities in the building now that things are obviously changed?
Yeah, we're speaking to one now. Instead of storage space downstairs, they're looking to convert it into pretty much it will be a customly built out space that they'll have the Wi-Fi there, and they can convert it into an office or anything that they want instead of storage.
Interesting. Yeah, I mean, it's definitely interesting with all the changes going on. I mean, Justin, if you had to to pinpoint something that obviously we've gone over so much, right? Something that is new, that's gonna, that should last. Obviously, we're hoping that, virtual closings are one of them, right? But outside of that, what are you thinking on the buyer or seller side, that things have changed over the last 2 to 3 months and should stay like this for the foreseeable future?
That's a good question. I don't know. I just think I think going forward, a lot more people are going to work from home, so they're going to definitely want more space. People are, like Serge said, we're hooked at our office, like we're hooked on doing showings. So I just think a lot people are going to rethink, and this is going to be an interesting trend. I would say in the next, if I had to predict in the next 10 years, of with new development, how are we going to go bigger? Because we saw a trend of one bedrooms and 2 bedrooms being that was like the primary focus on new development, right? There was a lot of 1 beds and 2 beds being developed, and the 3 beds and 4 bedrooms, you would have to go like to Upper East Side to get that. So I think spaces are going to get bigger in New York for new development.
Interesting. I know we're running short on time. We only have a few more minutes left. So if you guys want to have any closing remarks and anything in particular that you would want to share with the listeners, what is, I guess we could start off with you, Danny. What's one of the things that people should be prepared for moving forward, or you want to share that we might not have covered for people watching and listening?
So it's actually an answer to the question you just posed, Justin, about what's happening now that might stay into the future. I actually think open houses are going to be changed forever. I don't know if we're going to have a 20, 30 person at the same time open house ever again. And that's not necessarily a bad thing. I do think that's going to be a reality, where it'll be in smaller groups, a lot more by appointment, and a lot more virtual. I think that, the times of putting a sign up, come Saturday 11 to 1, come Sunday 11 to 1, I think that's going to go down a little bit. I just think that might be a lasting effect from what we have now. Otherwise, I do feel that the New York City real estate is going to be coming back to a relative normalcy soon.
Interesting. Justin or Kristen, you guys want to jump in with some insight or some things? And that's a great point, Danny, because I have spoken to people who live in more particular areas like Upper East, Upper West Side, co-op buildings, where it's a more high risk population, a little bit more of an older demo. And certain buildings, they've said that, we're not going to do the regular open houses. It might be an open house by appointment where 1 person or 2 people at a time go up, and not the regular norm. So I appreciate you bringing that up. That's a very good point. Anybody else want to jump in and share some?
Yeah, I 1000% agree with Danny. I don't think we're going to have these crazy open house parties anymore.
Are you excited about that, or are you disappointed?
No, I like to see everybody. I love everyone.
You social butterfly. I think that we're going to be working much more closely together. I think there's going to be better communication throughout the process. I mean, not that we don't have good communication as it is with, us on this panel, but I think we're going to look to find solutions. And Danny and I have already started, chatting back and forth and working together, and Justin and Steve and Serge. So I feel like that is a positive takeaway that I'm finding from this experience.
Awesome. How about you, Serge? What kind of insight would you like to provide that we may have not covered yet?
I think that's more towards the clients, buyers or sellers, that people that are hesitant and thinking, is it the right time to sell, buy, or to do anything? There's always a right time in every, in every time frame. So if you're looking to buy, sell, or to do something, there's an opportunity everywhere. You just have to have the right people around you and find that deal. So don't wait on anything, explore those options, talk to the professionals. That I always tell my clients, don't Google it, you have access to attorneys, mortgage brokers, real estate brokers, people that will do the work for you and will give you the right answer instead of you going online and have 25 different answers and then you're not sure which way to go. So.
Nice. Yeah, I mean, I've heard a lot from people who live outside of New York. Like, hey, have you ever thought that is the right time to buy in New York? It's the right time to buy in New York right now with everything going on. We're gonna get some deals. So, we hope no matter what, the business, continues to go on that V-tick up on the uphill climb over the next few months, and hopefully we don't have a W where it goes back down in the a second wave per se. But yeah, man, I can speak probably from everybody watching. We appreciate the time that you guys have put aside to join us on this webinar. There's a lot of change and quote unquote the new norm, right? I know some of us don't like to hear that, but it's questioned. There's a lot of questions on everybody's mind, whether they're renting and they're, in the beginning of the year, there was supposed to be this 50% buyer base of millennials who have the money and this was going to be the year that they bought. So, hopefully it's still a good time to buy, and hopefully the people who are hoping to buy in the spring can just turn that around and buy in the summer. One other question, have you guys seen extensions on rate locks? Because I've heard, differing opinions on this for people who want to buy, and they're like, what happens if there's another wave that comes in? What are we gonna do with the other wave? And I don't want to throw another question out, close to 3 o'clock, but is there any other any insight you can provide on that before we go?
I'll keep it short. I'll say yes, I've seen a lot of rate extensions, 30 and 60-day extensions with these.
Yeah, we have a 120-day rate lock to begin with, just for all clients in New York, and so that's very helpful. But I have the right answer from me is that it's case-by-case basis, though I have seen a number of extensions.
Okay. All right. Anybody else want to bring anything up before we go? No?
This was great. Thanks for planning and for being such a great host.
Oh, I appreciate it. Thank you guys for joining us. Serge, Serge, I know you've got like a million deals that you guys are working, as does everybody.
Why does everyone think I'm so busy?
I'm really not. 2 signed contracts right now.
I'm ready.
We see you.
I'm ready for more deals, so send them my way.
And guys, if you want to give out your contact information, I know that's very important for everybody. If you guys do wonderful business, and I'm not just saying that because I know you personally. You guys, I think everybody on this call are tireless workers, are extremely insightful in regards to today's real estate market. So if you want to share your contact information for people listening, feel free, so that way people could jot that down. How can we reach you?
We'll send a follow-up email too with your contact info to everyone that joined.
Awesome.
That works.
Awesome. Thank you so much.
All right, thanks guys.
Thank you
for joining us.
Take care.
I miss you guys.
Bye.
All right, later.
Bye, guys.